You may be wondering whether it's a good time to buy the dip on PayPal Holdings. It's down 24% after announcing weak guidance and their Q4 results. And over the past year, it's been hammered down 46%. The short answer is I would wait on the sidelines until the selling pressure eases, especially in the environment that we're in, before nibbling on some shares. I'm planning on buying PayPal Holdings, but not just yet. Sitting at 155 billion market cap and P ratio of 32, it still looks slightly expensive in this market. So if you want to know more information, stay tuned. Yeah, welcome back to another video. PayPal has been getting absolutely crushed, and since its highs of about over $300, it's down by 56% today. And I mean, this day right here, not looking really good for PayPal. Now sitting at 133, off more than 50% off of its highs over the year. So let's take a look at the reason why PayPal shares are down. Company blames inflation for weak guidance. It seems like companies are announcing inflation for just about everything, and PayPal is a payments giant, also looking to get into the crypto space. So let's see how they say inflation affected their guidance. In an interview with CNBC, CEO Dan Schulman said the company took a measured approach to guidance, but expects revenue to accelerate in the second half of the year. PayPal also missed user growth targets due in part to 4.5 million illegitimate accounts that join the platform. So basically like bot accounts, which are common on YouTube or even Facebook accounts. So yeah, that's part of the reason why PayPal was down. I mean, whenever you miss guidance, especially since so much expectation of growth is already baked into the stock price, that as soon as you start missing targets, your stock just gets absolutely destroyed, right? Just take a look at what happened to Netflix stock. I mean, when they announced their earnings, over the past 5 days, it's now up 15%, but they announced earnings and they actually beat revenue, they beat estimates, and it just tanked by like 25% again. So, I mean, and look at this sharp uptick of over 22% since it reached its lows there. But anyways, let's just focus on PayPal here. PayPal reported mixed results for the fourth quarter, which were short on earnings per share estimates at $1.11. And this was $1 versus $1.12 expected. It beat on revenue estimates though, reporting 6.9 billion compared to 6.8 billion expected. But also said it expects first quarter non-GAAP earnings per share of 87 cents, while analysts had been expecting $1.16. So that's like incredibly weak. It also anticipated that revenue would grow about 15 to 17% for 2022 on a spot and foreign currency neutral basis. Analysts expected growth of about 17.9% for 2022. So this is coming in on the lower end of what everybody is expecting. And like I'm telling you, although 17% growth is good, when it comes to a stock that already has so much of that growth priced into its market cap, I mean, like, this is what happens to this stock. It just gets absolutely decimated. He pointed to challenges including the transition of former owner eBay to its own payments platform and exogenous factors like inflation, bringing down consumer spending and supply chain issues disproportionately impacting cross-border payments. PayPal also missed user growth targets due in part to 4.5 million illegitimate users. The company also walked back its user growth goals. That said it was a choice to focus on sustainable growth and driving engagement. Block, the fintech service formerly known as Square, was also down more than 8% Wednesday morning, and Buy Now Pay Later service Affirm was also down more than 7%. So, I mean, we've seen kind of a surge in the stock price of growth stocks, but not nearly to the levels where they were in like 2020 when there was like a SPAC craze. However, they're still down significantly, especially when it comes to high growth tech stocks. They're really getting hammered. I mean, NASDAQ at one point was like in correction territory. I still think it's in correction territory, and I'm sure the NASDAQ is down quite a bit. So while the pace of growth in net new accounts is expected to moderate in 2022, we're seeing a steady increase in user engagement metrics and to see more marketing behind driving engagement in 2022. And already PayPal has shown that it remains nimble despite its size in exploiting rapidly emerging opportunities. and scaling an impressive buy now, pay later offering and launch of equity trading. The analysts express optimism about previously announced Venmo partnership with Amazon, which they expect could be the largest single catalyst for PayPal in 2022. And two analysts, I believe, downgraded the stock price and removed their 270 price target, said in a note on Tuesday that PayPal is now a show me story. Uncertainty, including significant shift in the company's approach to consumer acquisition and engagement. They also pointed to the executive's claims that full-year forecast was cautious due to, in part, of inflation and supply chain issues, which offered a sharp contrast with the more upbeat and annual outlooks offered recently by the card networks. So I think it partly is reasonable for the stock to be down by, like 24% on the day. I expect PayPal stock to trade even lower. I mean, this is 155 billion market cap, trailing 12 months price to earnings ratio of 31, which I think is still expensive considering the market that we're in, even though PayPal is still expected to grow by 20%. They do have that Amazon Venmo partnership, which I think will bring in a lot of revenue. But again, I want to be very, very cautious in the current market that we're in. Earnings per share of 12 months is $4.16. The analyst target estimate, which will go down, so again, right now expected for 2022 about 17.8% revenue growth, although that could come in at about 15% as we've just seen. And we've seen analyst price target to BTIG from buy to neutral. They downgraded the stock price, and that still the average estimate is $254. And so that represents, almost 100% increase if you bought now and just like if it went up to the average estimate. So it still represents a steep discount to where it was at like $300 per share, and it's still decently nice growth. Average estimate of about 30 billion in revenue, which would put it at a price to sales ratio of about 5, considering the market cap is about $150 billion. So price to sales ratio of 5. You could still consider that a bit expensive at the moment, but looking pretty good. And if you're looking at the stock price, I like to look sometimes at the technicals in determining when I want to get into a stock. And right now, I mean, we can see this huge rise from below $90 in 2020. This was in July of 2020. Sorry, this was way past July. Around 2020, July of 2020. In the summer, it basically shot up from $90 to $300. And I mean, this rise here was a bit too steep, and the fall is, just as steep. And what I would say is, even when you're looking at this downward trend, the Bollinger Band, what I like to do is buy when the candles are below the Bollinger Band, when the whole candle is basically below the lower Bollinger Band. And we've seen, even with this 24% decrease, this stock isn't even below the lower Bollinger Band yet, right? This is the price right here at $132. So what I would say is I would wait for more red candles to come because, that's also where the trend is. And buy when the Bollinger Band is at least like mostly kind of like this candle here. I like the way that this candle is looking. We can see huge selling pressure here, huge selling pressure, and it kind of eases off right here. So you might want to wait a couple of days for the selling pressure to ease before kind of picking up some shares. But I would say, if you bought it at 187, you could have sold when it was 192. You wouldn't have made that much money. But again, if you just waited a bit because this candle wasn't even fully below the lower Bollinger Band, you could have had a much better deal at $133. So what I'm trying to say is I would wait for the selling pressure to ease off. Usually when there's one large candle, there are more selling candles kind of following that. Or it could be something like Netflix that just jumps by like 15% over the next couple of days. That also in part was driven by a legendary investor. I think it was Bill Ackman, who said that he was scooping up shares of Netflix on the dip. But anyways, I don't know if something like this similar will happen in Netflix. All I'm saying is I would be wary buying when the red candle isn't even below the lower Bollinger Band. Because that to me is a pretty good technical standpoint, especially for like a short-term game. So overall, I love PayPal. I love what it's doing. I think this is the future of payments, and I think they are a pretty innovative company. All I'm trying to warn you is that the stats don't really look good combined with the technical analysis. I think we could get PayPal at about $120 per share. That would be kind of my price target of when I would start accumulating shares. And I'd love to know your opinion. And I mean, I think this stock is already at a steep discount compared to where it used to be. I just think we can get it at a much better price. But like, yeah, let me know what you think. I'd appreciate a thumbs up. Subscribe to the channel if you haven't already. Check out some links down below in the description to support me, such as my real-time buys and sells. So yeah, take care, love you all, and peace out.